Hi guys, hope that you're all doing well. In today's lesson, we'll learn the FIFO method, and let's start with 1.1 theory matching. Match the description in column B with the inventory term concept of system in column A. Write only the correct letter. We have ATE next to the corresponding question numbers 1.1.1 to 1.1.5. So in column A, we have our terms, and in column B, we have our definitions. So we have the FIFO method, weighted average method, specific identification method, periodic inventory system, and perpetual inventory system. Let's start with the FIFO method. Remember, this is first in, first out, meaning the stock that you buy first is the stock that you want to sell first. So let's read some of the definitions and check whether any of them match with the FIFO method. So you have cost of sales is calculated and recorded locally in the books at the exact time of every individual sales transaction. That doesn't tell us anything about the FIFO. Let's go to B. Each inventory item is uniquely identifiable and valued at its specific actual historical cost price. No. Let's try C. Inventory valuation is based on the structural assumption that the oldest stock items received are sold first. This one definitely talks about the FIFO. So 1.1.1 is C. Let's move to 1.1.2. We have the weighted average method. Remember, with this one, we just calculate all our items and we try to find the average. Okay, so let's read the definitions and see whether we can match. A talks about cost of sales. B talks about each inventory item is uniquely identifiable and valued at its. No, let's try C. We've already done C. Let's move to D. Inventory value is determined collectively at year end by calculating an average unified cost per unit. This is definitely the weighted average method. So it has the term average, and you know that with the weighted average method, you have to find the average cost price per unit. Okay, let's move to 1.1.3, specific identification method. This one talks about specifying products. Remember, I said that when companies that usually use the specific identification method often have items that are expensive or unique. Okay, so let's look at A. Cost of sales is calculated and recorded locally. No. B. Each inventory item is uniquely identifiable and valued at its specific actual historical price. This is definitely the specific identification method because it talks about unique products that are specified exactly as they are. Let's move to 1.1.4, periodic inventory system. Remember, with the periodic, we check our inventory at the end of the financial year or at a later stage. In terms of the perpetual, we constantly check our inventory. So let's see. Cost of sales is calculated and recorded locally in the books at the exact time of every individual transaction. At exact time of every individual sales transaction, it's definitely not A, right? We've already done B, we've done C, we've done D. We're left with E. Cost of sales is determined only at the conclusion of the financial period after executing a complete physical stock count. It's definitely E because it talks about calculating at a later stage. Let's move to 1.1.5, the perpetual inventory system. The only item that's left is A, the only definition. So in terms of a theory, you guys know this part. Now let's move to more questions. 1.2, case study, boomerang apparatus. You are provided with information relating to boomerang apparatus, a retail business operating in South Africa that sells a single specialized cricket bat. The business uses the first in, first out FIFO method to value its stock and operates on the perpetual inventory system. The financial year ends on 28 February 2026. Required, explain the meaning of the FIFO method in the context of inventory management and matching principles. We have 1.2.2, calculate the value of the closing stock. 1.2.3, we have calculate the following figures for the financial year ended 28th of February. You have total sales value, cost of sales, gross profit. 1.2.4, financial indicators, markup, gross profit, inventory turnover. 1.2.5, its internal control and theory. Now let's move to our information. We have information A, B, C, and D. So A talks about the stock balances, B talks about the purchases and carriage on purchases. We also have our returns to suppliers as well as sales information. So let's start at A. Stock balances 1st of March 2025, this is the opening stock. Okay, we have 120 bets at 1,500 each. Normally, we'd say 120, the units, right, times 1,500, which is 180,000 rand. But they've already done this for us here, so you don't really need to calculate. Now let's move to B. You have purchases and carriage on purchases. The following purchases were made during the financial year. We have our table here. We have date, number of units, units cost price, total purchase price, carriage per unit, and total cost. So let's try to make a few calculations. On the 15th of May, these are our purchases, right? On the 15th of May 2025, we bought 400. What are we dealing with again? 400 cricket bets. Okay, so we had 400 units and the unit cost price is 1,600. So let's say 400 times 1,600, we get 640,000 rand. Okay, they've done that for us. However, we still have carriage per unit. So let's say 400 times 50. That's 400 times 50. I just want to make sense of this table. Okay, 400 times 50 gives you 20,000, and you don't have 20,000 here or there. So let's try, since we have our cost price here as well as our carriage, let's say 1,600 plus 50. Okay, 1,600 plus 50 is 1,650. Now let's say 1,650 times our units. 1,650 times 400 is 660,000. There's a 660,000. So can you guys see that when we want to calculate our, for example, the value of our units, we have to say 400 times our cost price, which is 1,600, plus we add our 50, our carriage. Okay, when you do so, we'll get our 660,000 rand. Okay, so let's do so for the 12th of October 2025. We had 500 units. Our unit cost price is 1,750. Our total purchase price is 875,000 rand. So let's try to make sense of this. We had 500 units. Let's say 500 times 1,750. It gives us 875,000 rand. Okay, please make sure that you verify with a calculator as well. So let's try 500. This is our units. Okay, times, let's say 1,750. We have a carriage which is 60 times, plus 60. Plus 60. Let's punch this in a calculator. We have 500 times, in a bracket, 1,750 plus 60. We get 905,000 rand. There it is. So let's do the same calculations for the 18th of January 2026. We had 250 units. So since we know the pattern, let's just try 650, or the rule. 650 times, we have our unit cost price, which is 1,850, plus it should be 70, your carriage. Okay, so this will be 250 times 1,850 plus 70. We get 480,000 rand. Okay, so we now know our rule and we kind of understand this table. Okay, now let's move to additional information. Guys, when you receive information about inventory, whether it's the FIFO or the specific identification or the weighted average, try to play around with the figures before answering, as this will help you. This will help you to get familiar with the table. I know that when you get such a huge table or different tables, sometimes your carriage isn't here. They might show it in another table there, and everything just looks intimidating. Just play around with the figures and you'll understand what's actually going on. Okay, let's move to note on carriage cost. Carriage on purchases is not included in the unit cost price column shown above. Okay, in terms of the GAAP, IFRS, and SMBs, carriage cost must be added to determine the total landing cost of stock for closing inventory valuation. What this basically means is that when we make our calculations, remember we did 400 times 1,600 and it didn't give us the total cost. Why? Because we had to add our carriage. So we'll have to do that whenever we deal with questions under this table, okay? So that's why I'd recommend that you guys play around with your figures. Let's move to C, returns to suppliers. It says, on the 20th of October 2025, meaning on this date, 30 bets from the batch purchased 12 October 2025 were found to be defective and returned to the supplier. The supplier issued a credit note refunding the full cost price and the associated carriage costs in full. So, on the 12th of October, we sold 500 units. However, on this day specifically, there were 30 bets that were returned. So I think this might come in handy whenever you get, for example, such adjustments. I'd always recommend that you note them in your column, you update the information that you're given. So we had 500 units, okay? However, 30 were given back. 30 were returned. So let's take note of this 30. I want to raise this information. You have D sales information. A total of 990 bets were sold during the financial year at a fixed standard retail selling price of 2,800 per bet. So that is our information. We have the opening stock. They gave us the opening stock here. We then have our purchases and carriage on purchases. We also have our returns and our sales information. We now have some knowledge about all the information that we've been given. Now let's go back to the questions. We have 1.2.1. The question says, explain the meaning of the FIFO method in the context of inventory management and matching principles. Okay, so you basically have to explain the FIFO method. So you guys can use your own words. We can say something like the FIFO method states that the first stock items purchased or manufactured are the first ones to be sold. Okay, first in, first out, don't remember. Then you can say something like the items remaining in the inventory at the end of the financial period are valued based on the cost prices of the most recent purchases or sales. So just use your own words to explain this and you'll get 2 marks. Let's move to 1.2.2. Calculate the value of the closing stock on 20th of February 2026 using the FIFO method. Okay, so let's look at our information. It's featured below. Guys, I know that there are certain formulas that I taught you guys. However, I said you can try and cram the financial indicators formulas, for example, let's say gross profit percentage, inventory turnover, and so on. In terms of finding your closing stock, you can use the information that's been given to you. You don't necessarily need to cram the formula. Okay, you can create the formula with the information that you're given. Closing stock is basically the information, the unit that are remaining. Okay, so remember, when you buy inventory, you want to buy it and then sell it so that you can make a profit. So closing stock is basically the value or the number of things that you still have, items that you haven't sold yet. And to find this, let's look at our information. We have A, which is opening stock. Okay, we can start with our opening stock. Let's say opening stock. Then we have we have purchases and carriage on purchases. So we can start with our purchases. Do you think we should add or subtract our purchases? We should add it simply because it's something that we are getting. Okay, let's add our purchases. What else do we have? We have returns to suppliers. Okay, so in terms of the returns, do you guys think that we should add or subtract them? We should subtract our returns. And lastly, what are we left with? We have sales, right? So in terms of our sales, do you think we should add or subtract them? We should subtract our sales. So if this still doesn't make sense to you, you can just try and memorize this formula, but write it under the closing stock for FIFO. So the clothing stock question under FIFO will usually be out of a lot of marks. For this one, let me just say 8 marks, as there are a lot of steps that are involved. Okay, so firstly, let's start with our units. Remember, we have to have our units and then we multiply. So we have our opening stock. Let's look at our information. For opening stock, we had 120 beds. Okay, so let's write that 120, we're substituting to this formula. Okay, we had 120 beds, then we had our purchases. Let's look at our purchases. Here, we have 1,150. Total units are 1,150. So we can use that figure. It's given to us under the purchases. Remember, information B is that information. So it's given to us. We have a total of 1,150 purchases. This is why I recommended that you play around with the figures so that you can get familiar with the table that you're given in your exam. So we have minus returns, right? Let's look at our returns. Information C talks about returns. 20th of October 2025, 30 beds from the batch were purchased on the 12th of October 2025 were found to be defective. So you basically have to subtract 30 beds. What are we left with? We have sales. Now from our sales information, we have 990 beds that were sold. So let's subtract that 990. So we'll say 120 plus 1,150 minus 30 minus 990, and you should get 250 units. You've been calculating the units. You don't know the money yet. Now for the second step, let's allocate our units. We have our units here to the most recent batch, meaning this one. Okay. Now, why are we allocating this 250 to the last one? Remember, in FIFO, we want to sell our first stock first, and then the closing stock or the units that we have left are most probably these ones. So in this case, you have 250 units. Okay. That means all those 250 units are there. So it's 250 here. You'll only focus on the last batch because the 200 and the 500 are already sold or bought. Remember, it's the FIFO. So we have 250 units. We'd say 250 times 1,850. But remember, they told you that carriage on purchases is not included. So you have to say 1,850 plus 70. Okay, so this will be 1,850 plus 70, which is your carriage. This will be 1,920 unit cost price. Okay, this is not your value. Now, what should you do in the next step? Guys, remember something. In stock valuation methods, we want to find the value of our actual stock. Okay, so you have a 250 units here, and you have your 1,920, which is basically your cost price. Okay, remember, we have to say 250 times this 1,920, and that amount is the value of our stock. When we count our stock, we use our inventory systems. We use the perpetual and we use the periodic. The perpetual meaning we continuously or consistently count every time something is sold and bought. In terms of the periodic, we only do it once in a while, maybe at a later stage at the end of our financial year. Okay, so here we know how many units we have, and here we have our cost price. So we still have to find the value valuation method, meaning you want to calculate how much your stock is worth. So we still have to say 250 times this 1,920. Okay, so 250 times 1,920 should give you 480,000 rand. Now this is your closing stock. This is the value of your closing stock. The question said, calculate the value of the closing stock on 28th of February 2026. So when you did this, when you looked for your remaining units and the cost price, you did not find the value. You only calculated the quantity. So remember, in valuation methods, if they do your units and if they do your cost price, don't think just because I've done a lot of calculations, I'm done. You still have to multiply everything and get your final answer should be a certain number.
This video is proudly brought to you by McDonald's. Download the McDonald's app today and start earning points every time you order your favorite meals. The more points you collect, the closer you get to exciting rewards like free burgers, desserts, drinks, and more. Simply order through the app, collect points, and redeem them for delicious treats once you've reached the required threshold. Get the McDonald's app now for more information and start enjoying rewards with every bite.
Now let's move to 1.2.3. Firstly, we have our total sales value. Now guys, what is your total sales value? What do you think this means? This basically means how much money you made from selling something, right? Sales, when you talk about sales, it means the money that you generated from selling something. So in terms of total sales value, in inventory, it means all the money that you made. You're not just looking for a specific amount, you're looking for everything that you've done. So it's related to sales. Let's look at information. Sales D is about sales. It literally says sales information. So we have a total of 990 bets were sold during the financial year at a fixed standard retail selling price of 2,800 per bet. So for this question, you can just say you sold 990 bets, right? So we'll see 990 times we sold the bets at 2,800 per bet. Okay, so this will be 2,800 per bet. We'll say 990 times 2,800, which is 2,772,000. Yes, it's just 2,772,000. This is the money that you made from selling your bets or selling your inventory. So when you see certain questions in inventory, don't overthink and think of different formulas or different steps that you have to take. Sometimes when they ask you a question, the answer is right in front of you. They said total sales value. Think of what a sale is. Try to be open-minded. Don't focus on how many tables you have. The information is always right there. So for the total sales value, you're basically looking for all the money that you made from selling something. In this case, you're selling cricket bats and you sold 900 at 2,800. You'll obviously say that 990 times 2,800. That is your total sales value, how much that stock was worth, how much money you made from selling. Now let's move to the next question. We've done total sales value and we've calculated the value of our closing stock. Now let's do cost of sales. So guys, what is your cost of sales? This means the cost of goods that were sold. You have sales, okay? So it means the cost of those sales, how much money you spent in order to sell certain items. So for this question, you have to focus on our sales and basically calculate, let's say we made, let's say our company had a total of 1,000 t-shirts, okay? And we sold, let's say, 800 t-shirts. So we had 1,000 t-shirts, however, we sold 800. This means this is our sales. We want to find the value of these 800 t-shirts, the money that we had to spend in order to sell those t-shirts. So you'll focus on your sales information. Look at such, I wouldn't really say keywords because you'd have to overthink every time you enter an exam room, But when they give you a certain question trying to link into information, they said cost of sales. That means you have to somehow check your sales information. Okay? Now let's look at our sales. They said a total of 990 bets were sold. Let's write 990 here so that we don't forget. We wrote 990. So we want to find the value of these 990 units. At the end of your question, you obviously have to say, let's say 990 times, let's say 10 or 20 or something to find the number. And that is your cost of sales. So in this case, you have 990 bets that were sold. Now let's start from the top. We said 990, right? You have to come to this information, the purchases and carriage on purchases information. In B, we have our purchases and carriage on purchases. Okay, so we probably have to multiply this 990 with our cost price. Now, where do we start? We'd start from the first items that we had. In FIFO, it's first in, first out, meaning when you buy something first, you want to sell it first. In this case, we sold 990 units. So we should most probably start here in our opening stock. Okay, let's find the value of our opening stock. It's 120 times 1,500, which is 180,000. They've already given us our values, so you don't need to calculate. But then again, I said play around with your figures so that they make sense to you. So guys, that means from this 900 units, you sold the first 120 came from your opening stock because you sold it first. Okay, let's move to B. We have our purchases. All right, let's move to B. We had 400 units here. We had 500, but remember we said minus 30. That means there were returns. So for the 400 units, let's look at a calculator first. We had 990 units that were sold, and it's FIFO, meaning we want to sell the first items first. Here we had 120 bets initially, so we say 990 minus that 120. We still have 870. So from this 870, let's take out the other 400 units. We can still take out 400. Okay, if we say minus 400, we have 470. Okay, now let's say 400 times, we'll say 1,600 plus 50. Remember, you have to consider our carriage, and you'd know this because you played around with the figures when you got your paper. So this will be 1,600 plus 50, which is 660,000. Okay. Now let's look at a calculator. We had 900 units again. 990 units minus, we took out the 120, which was the opening stock. We also took out 400 from this, right? Now we have 470 units left. So we need this 470 from October. However, in October, we had returns. We had 30 returns. So we can write this as, in October, in the opening stock, on the 1st of March, you had 120 bets, and we said multiply by 1,500. In terms of your purchases, during the year, we had 400 units, meaning we bought 400 units. And we have our cost price, which is 1,600 plus our carriage. Okay, which is 660,000 rand. So in October, let's say 500. On this day specifically, people returned 30 units. So you should subtract 30 simply because of the returns. Let's read this adjustment again. 20th of October 2025, 30 bets from the batch purchased on 12th of October, meaning on this day, were found to be defective and returned to the supplier. So our information has to relate to the 12th of October 2025. Hence I said minus 30. So we'll say 500 minus 30 is equal to 470. This is your units. Now remember, we said 990 units were sold. So we took out 120 from our opening, then 400 from the 15th of May. Then we have 470 units left. In October, we no longer have 500. We have 470, simply because there were returns made on this specific day. So this entire 400 units will be taken from this 400. 500 minus 30 is 400. Okay, so this 470 will take out the entire 12th of October 2025 batch. I hope that this makes sense. If it doesn't make sense, please let me know in the comments. So we take all the 470 units. Okay, so we'll say 470 units times, remember, we've already considered the 120. We've considered the 400 units. So that means we no longer have those items. We've completely sold them. They are sold out. So now we are at this batch. And that is the last batch. We'll no longer go to 250 as we didn't sell more. We sold 990 units. So we have to consider the cost price of the 12th of October, which is this 1,750. But because you play around with the figures, you don't forget your carriage. So we'll say 1,750 plus 60. Okay, so 470 times 1,750 plus 60. Please make sure that you use a bracket. We can solve this part first and then you multiply it with the 470. However, I'd recommend that you just punch all of this in your calculator and your answer will be 850,700. So guys, this is how we calculate our cost of sales in FIFO. You have to start from the beginning because you sell those units first. And then you end up where all your units are sold out. Okay, in this case we had 990. So we stopped there at the 12th of October 2025. That is what the FIFO is. Please rewatch this video as many times as you can and try making notes on the side. If I ever mention anything that you consider important, write it in your notebook. And as I said, we'll do more examples as well as past question papers. Now, what should we do? We have to calculate our cost of sales. We've done all these calculations, however, we aren't done. We sold 120 units plus 400 plus this 470. In total, it's 990. So we have our units, however, we don't have our value. So we have to say 180,000 plus 660,000 plus 850,000 rand. That will give us our cost of sales. Remember I said you want to find the value of these 990 units, and so far we've been focused on the units and we did find some values, 3 values. So we need to add those values to get the total amount. So this will be 180,000 plus 660,000 plus 850,700, and your answer will be 1,690,700. Now that is your cost of sales. Now let's move to the next question. We have gross profit. What is your gross profit formula? Remember, you did this in the income statement, and in the first few columns, you know that you have sales minus cost of sales. So there is your gross profit. However, you have to remember here that it's your total sales, right? So it's basically sales minus cost of sales. Let's see, we calculated total sales value. That is the amount that we use. We said that our total sales value is 2,772,000 minus our cost of sales that we just calculated. It was 1,690,700. So your gross profit is 1,081,300. You might get 2 marks for this. Now let's move to 1.2.4. We have calculate the following financial indicators on 28th of February 2026. Remember, I told you guys that with the financial indicators, you can just cram the formulas. We have markup, percentage achieved, and this is 3 marks. So remember that your markup percentage is gross profit over cost of sales times 100. You've calculated your gross profit, you also calculated the cost of sales. So when you have this information, it's very easy. You just have to remember the formula and substitute. What is a gross profit? A gross profit is 1,081,300 over your cost of sales is 2,772,000 times 100. Now punch all of this in your calculator. You should get an answer of 63.96. So it should be 63.96%. Or you could round it off and get maybe 64.0% as your markup percentage. And you might get 3 marks for this. Guys, when you watch this video, I'd honestly recommend that you watch a certain section first without making any notes. Then from there, you can watch that section again. For example, right now we're doing the markup percentage, okay? So the previous question, we calculated our gross profit. So when you watch the markup percentage part, just watch the entire part without writing any notes. From there, you can write the notes on your side so that when I substitute these values, you can see that they are items that we've done before. Let's move to gross profit percentage on sales. So your formula for gross profit on sales is gross profit over, let's say, sales or total sales. You can just say sales, but when you substitute, make sure that you substitute the right amount, times 100. Another way to remember these formulas is that they said gross profit on sales. So you know that on top you have a gross profit on sales, meaning on top of sales. So gross profit is on top of sales. So you guys know that a percentage is obviously 100%. So if you remember this part, just remember that when you're looking for the percentage, you have to multiply everything with 100%. So that's an easy way to remember these formulas. We have gross profit. What is your gross profit? It's 1,081,300 over the total sales is 2,772,000 times 100. When you punch this in a calculator, you should get an answer of 31.01%, and this could be 3 marks. Now let's move to inventory turnover rate. Okay, so your inventory turnover rate formula is cost of sales over average inventory. Okay, so you guys know cost of sales because we calculated this in the previous questions, all right? We did this for 6 marks. So for your average inventory, you know that it's, because I did this in the previous video, it's opening stock or opening inventory plus closing stock or closing inventory all over 2 over 2. So let's find the value of our opening stock. This is our opening stock. They tell you right here in this information. Opening stock. Okay, so we have to say our opening stock is 120 times 1,500. They already give us the amount that they did the calculations for us. So it's 180,000 plus your closing stock. Remember, we calculated your closing stock there, the value. So your closing stock was 480,000. This is over 2. Punch this in a calculator and you should get an answer of 330,000. Okay, however, this is your average inventory. You haven't answered the full question, so we have to substitute this 330,000 there at your average inventory. So I'm just going to erase this, but you guys should show all this information in your answer book or in your notebook or your classwork book. Our cost of sales was 1,690,700 over our average inventory that we just calculated. We said that is 330,000. So punch this in a calculator and you should get an answer of 5,12. So is it 5,12 rands, units, or what is it? They said inventory turnover rate expressed in times per year. So we have to say 5,12 times per year. The answer is right there. They told you to use times per year. But then again, if they didn't say expressed in times per year, you just have to remember that your inventory turnover rate is basically how many times you buy and sell your stock in a year. So you can say 5,12 times. That still works. So we're done with 1.2.4. We have to move to 1.2.5. We have internal control and theory. This is so you could get really easy marks. The owner is considering switching to the periodic inventory system. Remember, at first they used the perpetual, right? Let's check. Yes, they used the perpetual inventory system, meaning they counted every time they sold their stock. So the owner is considering switching to the periodic, meaning they count at a later stage, to save on administration costs, meaning having to count all the time. Give one clear reason why you think you would advise against this decision. Okay, guys, this is probably like a trick question. Remember, in the perpetual inventory system, you consistently count. In the periodic one, you don't count. What they're basically asking you is the disadvantage. Why would you advise against? Notice how the against is in italics. They basically want to know the disadvantage of the periodic inventory system. The periodic you count at a later stage. What are the disadvantages of that? Theft could take place. Business cannot track its inventory. Businesses cannot track their inventory. There are damages that could take place, and they could only see this at the end of the year. So you could say something like a theft would not be detected. If you can think of anything longer or smarter, definitely write that. These are easy questions. These 2 marks could be yours. Then we have an audit of physical stock on the 20th of February 2026 revealed that only 230 beds were physically present in the storeroom. Calculate the number of the units missing. Okay, let's check. They said 230 beds were physically present in the storeroom. We had 230 beds that are in the storeroom. Physically present means they counted those beds. Now let's look at information. Remember, this is all under the Boomerang Company. Our information here, we actually have to refer to our closing stock balance. Okay, remember when you did our closing stock, the closing stock means the units that you didn't sell. Okay, so remember I said when you did the calculations, you had 250 units times a certain amount, and it gave you, let me check, 480,000 rand. This is the value of your closing stock. So you have to look at your closing stock units, okay, and you subtract that from the units that were physically counted. So I would say for theft, this is kind of a formula. We just have to say closing stock units, the items that you had in your closing stock, minus your physical stock or physical inventory count, actual physical inventory count, it doesn't matter. Let's just say closing stock units minus physical stock units. Okay, so for your closing stock units, you have to check this information. The units, you had 250 units, so we'd say 250 minus your physical stock units are, they told us that it's 230, so we'd say 230, 250 minus 230 is 20. So that means you have 20 units missing, or missing units. So in your notebook, you could write this as your formula. Now let's move to the last question. We have, let me erase this. State 2 practical internal control measures the owners can implement to prevent stock losses. This is out of 4 marks. You just have to use your brain. What can you do in your company to avoid experiencing theft? In this case, there are bets that are missing. And you guys saw the sales, you guys saw the units and so on. This company is worth a lot of money. There are millions that are involved. So what should a multi-million rand company do to prevent stock losses or to prevent theft? They could install CCTV cameras. Where should they install the CCTV cameras? In their stock room or storeroom. Okay, or in their inventory room, it doesn't matter. You could install CCTV cameras. What else could you do? They already use the perpetual inventory system, meaning they constantly count their stock. So they could do random stock counts. They shouldn't really prepare anyone. In that case, if somebody tries to steal or if someone plans to steal, they'll know that they never truly know when they count their stock. So let's say a random physical stock count, or anything that you can think of. You want to stop theft, to prevent people from stealing your bets. So these are the 2 things that you could try doing. So that is all under the FIFO evaluation system. I hope that you guys understood this. If you have any questions, please send us an email. As I said, if you guys want access to this document, you can just send us an email or drop us a WhatsApp text. And I'll see you guys in the next video where we do the weighted average. Thank you for watching. Please like and subscribe. I'll see you in the next video.